Morning. We'll start in a couple minutes.
The Fed's Goolsbee set to speak on CNBC. Mexico retail sales year over year came in at 2.4%, above expectations, 1.6% in July.
Mexico retail sales, MOM, came in at 0.1%, above expectations, 0.1% in July. Crypto today. Bitcoin, Ethereum, XRP show signs of bottoming out. S&P Global PMI likely to point to firm U.S. economic momentum in September.
Gold prices hit new record highs. Powell's speech in focus.
Ukraine says it hit Russian oil infrastructure in Bryansk, Samara regions. Pound sterling faces pressure on slowing UK business activity growth.
Kiwi. US dollar bounces up from lows. Remains capped below 0.5870.
US dollar Swiss franc price. Forecast 20-day EMA continues to act as key barrier for US dollar bulls.
The Fed's Goolsbee set to speak on CNBC. Mexico retail sales year over year came in at 2.4%, above expectations, 1.6% in July.
Mexico retail sales, MOM, came in at 0.1%, above expectations, 0.1% in July. Crypto today. Bitcoin, Ethereum, XRP show signs of bottoming out. S&P Global PMI likely to point to firm U.S. economic momentum in September.
Gold prices hit new record highs. Powell's speech in focus.
Ukraine says it hit Russian oil infrastructure in Bryansk, Samara regions. Pound sterling faces pressure on slowing UK business activity growth.
Kiwi. US dollar bounces up from lows. Remains capped below 0.5870.
US dollar Swiss franc price. Forecast 20-day EMA continues to act as key barrier for US dollar bulls.
Oh, yeah. G'day, mate. How are ya? How's your mum? Wasabi! Ni hao! Jumbo! Uh, 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 You guys excited for PMI? I can't wait. Yeah, well, look at that manufacturing PMI out of the UK. Oh, my Lord. What do you mean no sound? It shows that there's sound. Does anybody have sound? It says you have sound. It's telling you sound. There we go. So anyways, PMI, yada, yada, yada. The only thing that matters this week is Friday's PCE. There's nothing on the calendar. I've already analyzed it. None of this matters. Oh, what about durable goods? Yeah, whatever, you do you. So anyway, so we only work with facts. We like probabilities that say 82% chance it goes back to, but it's such a small trade. Yeah. So anyways, you guys ready to go? You ready for a Fast and Furious? Yeah. Yeah, you guys ready? Well, let's go. Remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Yep. So we're going to do some macro here. And on the macro side, today I decided to do risk gauges. And I think I can zoom in a little bit for you guys since it's inside of a YouTube stream. What we want to look at here is try to match what we intend to do today with what others are doing. And we want to aggregate what others are doing to discern, is there any congruency? Meaning, is everyone risk on or is everybody risk off? And well, there's sort of medium term and longer term. Like in general, are people, are the markets buyers? Are the market sellers? Or somewhere in between. So then we have to say, well, whose opinion do we care about? So we look at options traders, short-term yield traders, long-term yield traders, gold traders, stock traders, dollar and yen traders, and volatility. Now, yes, you can trade the VIX, but we're just saying, hey, volatility is bad, so VIX going up is bad, and VIX going down is good. And the interesting thing is VIX is actually just a mix of options traders and stock traders. VIX has to do with how many options are being traded on the S&P 500, and you would only do a position like that if you were protecting a cash investment into the stock market. That's why VIX is bad, where if suddenly you feel uncomfortable with your cash position's vulnerability to a pullback, well, you don't want to get out of your cash position, so you might as well hedge it using an option. So if suddenly lots of people are hedging, you're like, ooh, lots of people are worried. And that's what we're trying to figure out. They perceive the risk. And so right now, yeah. And we're just sort of in the middle of nowhere. But it makes sense. It makes sense. Especially if you look at seasonality, right? If you look at seasonality, you know week 39, week 40, and you're already anticipating week 41, week 42, week 43. So therefore, all of this kind of makes sense. Why does it make sense? Well, around the third week of September, the strategy changes. So if you were doing well in May and you figured out Forex, and then around July and August, you lost money, and then you started to make money again, Well, now, if you keep doing that, I don't think that's going to continue working. And we move on to something new. It's interesting how it works, huh? Something works for a while, then it doesn't work. And then something new works, and then that doesn't work. And then something. Well, actually, that's totally normal. And those are patterns that you should be aware of, right? So when I look at this, you're like, yeah, okay. So I might be leaning toward risk on. It just, when you look at the put call ratio, yeah, we got bulls, treasuries, yeah, yields are down. Yeah, that's fine. Gold is up. Uh-oh. Why are they buying so much gold? Are they hedging inflation? Okay. Well, that can't be good, but you could score it as good. You could say aggregate demand or inflation hedging. Score it the way you want. This is just doing the work. Look, gold is up a lot this month in the last 30 days, right? Okay, great. S&P 500's doing all right. Yields are down on the 10-year. Okay, good. I like more affordable money. I like lower mortgages. That's going to be good for the economy. Yeah. Yen's flat. Okay. Well, that doesn't mean yen is strong. So what if you thought, let's say for the example, the next 6 months the yen is going to be weak? Well, it's not weak now. Ooh, but what if it was at support? What if it was trying to make higher highs and higher lows on small time frames? Well, maybe you can start building positionings that will weaken the yen. Or what if you thought the opposite? That the Bank of Japan is going to raise interest rates, so that's actually going to create a strong yen. Cool. Well, it's not strong now, but you might start looking at pullbacks to resistance. You're paying attention. You're doing your analysis. Just because it's a zero doesn't mean you don't open a chart. Yeah. But look at yen, disappointing. Okay. Dollar, flat yesterday, a little bit strong recently, a little bit weak overall. So it's showing that it's not a giant risk on mode yet. Well, the stock market's at all-time highs. That's just one. And vol is way down month over month. That's great. Remember, vol is bad. So what do we know? Well, when you look at the aggregate over the last 30 days, it's just ever so slightly risk on. Ever so slightly. Well, it's not negative. People are not freaking out. In fact, people are not hedging. Wait, no, I got it backwards. Brain fart. No, they are hedging. Sorry, that's terrible. They're hedging like crazy. Sorry. Hey, dude, if you can't laugh at yourself, dot, dot, dot. Yeah. So, anyways, okay, yeah, there is concern. Whoa. There is concern. Yeah. So I want to see that coming down, and that being one of the major reasons. Like, if anything else just moves more, it doesn't matter that much, right? So these are absolute scores. So one of the things that I'm working on is an idea of using a different data set that could do something similar to this, but differently, completely different math. And then combining some of these things so they're not so absolute. So like, for example, when we look at VIX, month over month volatility is up 11. That's bad. What if it was up 1,000%? It's still a negative one. You're like, wait, what? Yeah. Like, there's no difference between up 2%, up 10%, up 100%, up 1,000. And are all of these as important? How important is the put call ratio actually? And then why do we have a 2 and a 10? Do we actually care? No, we care about the spread. Oh, okay. So, I'm working on some cool toys for you. Okay. And sometimes it's not just the price because, you know, there might be different layers to each of these, different weights for these. So, anyways, I'm working on something. I'm working on something on your behalf. So, anyways, there's our macro. Okay, euro dollars, not an amazing thing to be trading right now. You probably should be focused on Aussie or CAD. But I'm assuming you've already done your relative strength exercises. You already know lining up strong versus weak. Okay. Now, if you don't, what is it that you do in your routine? You open up your charts and you look for a trade, but you're not lining up strong versus weak before you even open a chart? Really? Some of you might have seen my launch of QuantBox like 3 years ago. And I teach you my first strategy ever. Just turned out to be quantitative and still the way I trade. And for you to quantify how I quantified strong versus weak. And I spent an hour doing analysis before I even opened my chart because back then you couldn't trade on your charts. So relative strength would probably indicate euro dollar is not the greatest opportunity, but we cover all the currency. So, so TRADARS, for example, we looked at all the Aussie setups on everything. Yeah. So, anyways, let's look at our euro dollar. Okay, what does this tell you? Okay, this tells you not well. This pattern is found on the hourly, but it's set up on a 4-hour or daily. Okay, so in the short term, you have this kind of like a three-wave correction. Now, imagine you were on a higher time frame, not the hourly, but maybe the daily. And maybe on the daily, it just looks like this. Yeah, yeah. Well, that's exactly why that pattern forms. So I'd say, ooh, look at that, a Gartley on the hourly chart. I wonder what the 4 hours doing. Where's the buy zone? Should I kick it off to 21, or is there a pivot I should notice? That's how the Wayne do. In general, okay, we have come to a potential opportunity. Okay, based on what's happened before, we're in a zone in which we may consider buying. And that is sort of our price for plan A. So this pattern shows strength, and this arrow shows opportunity. And so the first one would be kick it off of the lower support line, because that's what support is, a place for bulls to buy. And the second one is more of a horizontal one. Ends up being pretty much the same plan. So you break it down and digest it the way you want. Okay? But that's what the pattern is suggesting. It's not technical analysis. It's just like, oh, did you see? There might be some bullishness forming, okay, on a 30-minute chart, which is confirmed already. We know this on an hourly chart. So somewhere around 1762, which 1747. So it's saying off of this lower line, somewhere around there, that's what this is saying. Okay, you're going to get like that. Cool. All right, so now put that down. Go look at your euro dollar if you happen to be a bull. Cool. See? What is this? Well, based on this pattern, okay, this is a profit taking. So if you buy it around 1750, which is kind of these plans above us, if you get the opportunity, then you can ride it up and somewhere around here based on this pullback. So just imagine it's Fibonacci. Okay, a 618 predicts a 1382. So this is a target. Is it the target, the ultimate target? Dude, this could go up for 5 years. Probably have a pullback. But this pattern is only the pattern. So a 618 predicts a 1382. That's that. It's just the pattern. Is that always going to be the high? Of course not. Okay. Does this mean down from here? No, I'd probably do a fib of this. And this looks like a 382. Okay. This looks like a 786. And a 786 would indicate vulnerability to rolling over on a double top. Okay. A 382 would predict a higher high, higher low, higher high. Cool. Easy. Done. Not a problem. What else is going here? Well, it's a different pattern on the same chart on the same time frame, but then it makes me think the 382 has a pretty decent chance because this B to C is what we wanted on a breakout. So now we're thinking maybe off of this, okay, and up, okay, as it turns into a new pattern of some sort. I don't know the steepness. It might incline. It might be a wedge versus a triangle, or it could be a channel, okay, where it's perfectly parallel, like something like that. There's the Dow. So lovely. Look how beautiful that is. Okay, and so in that case, that's a channel, not a wedge. And this is not a wedge, it's a triangle. Okay, it's slightly skewed to the up. But now, if you're going to buy a dip, you don't buy a dip because an ascending triangle breakout. You buy it because you anticipate technically and fundamentally, that we go from a triangle to some variation of a channel. I mean, it could be a wedge like this with an apex, or it could be, up forever, okay, like this Dow. Cool. I own quite a bit of Dow. Yeah. Cool, right? I'm going slower than yesterday. Hmm? Like, dude, this guy slows molasses on a cold Georgia morning. Really don't. You're hurting my feelings. Okay. Why not use TradingView? I don't know. I've been using MT4 now for, I don't know, 10 years. I mean, like I have gray hair now. When I started, I was a young man. Now I have gray hair, and I'm like, it's good enough. I don't need to. Why do I need to change? The colors are prettier. I don't give a damn. Look, I over the last so in my first 2 or 3 years, I found 1,000 ways that don't work, and I found a few things that seem to work for me when it comes to trading. And for the last 20 years, I've just confirmed over and over and over and over and over again those things work for me. So, well, if I switch over to TradingView, I could do this and that and the other thing. I'm like, I don't need to do any of those things. Okay. Yeah. So I know TradingView is cool in many ways. Just like I don't need to be innovative anymore. No need to be innovative. You got the golden goose. What more do you need? Okay. Anyways, so nothing against TradingView. I don't know. I'm more interested, like the trading platform is not that interesting. I could probably trade on TradingView. I could probably trade on this. I could probably trade on C Trader. I could probably trade on Trading Terminal. Making the decision, Karnak, is to me the prime directive. You should almost be able to trade just picking up the phone and calling your broker. I know we don't live in a world like that, and I've never really done that. But you probably it wouldn't if you were a pure how about like let me attack it different. If you were a pure fundamental trader, could you trade without a chart? Yes. Now, if you're a pure technician, could you trade with only a chart and no fundamentals? Yes. The best use both. But neither it needs to be overly complicated. Okay, for example, if PCE is higher than GDP, we have inflation. Oh, buy some gold. Cool. So we have PCE on Friday, right? Yeah. Okay. Is PCE going to be low? Well, I don't know. I don't work at these government statistical agencies. I don't know what the. All right, based on the trend in PCE and the trend in inflation, is it going to be low or high? Not low. Okay, fine. Great. At the very least, not low. What about GDP? We're at 3.3 in the United States. Are we going to maintain 3.3 for a long period of time? No, 2.2 is average. Even 2 could be considered average. So 3.3 is huge. Now, would a Fed cut push up GDP? Could be. Could stimulus push up GDP? Could be. So it could be policy. But even then, 3 is high. So what if, over the next 6 to 12 months, is it likely, in your opinion, based on your research, not your gut, what is the probability inflation remains relatively high, kind of in the 3-ish zone? Meanwhile, GDP falls to kind of like 2-ish. Well, then you should be accumulating gold on pullbacks. Oh, now, Karnak, let's open up TradingView and look for support in which to buy. Let's look at TradingView and buy higher lows. Well, when do you pull the trigger? I don't know. Let's use either an oscillator or a moving average crossover. Okay. You see, like, I don't care what chart it is. So I just am using what I'm using. I used to use the GFT deal book. That was my first love. Yeah. And I paid a lot of money because I hired programmers to develop custom indicators like my pivot points and my Fibbits and a bunch of other things. And I gave them away for free. It was great. But eventually that got shut down when FXCM bought GFT. And FXCM was using MetaTrader, and it had been MetaTrader had gotten popular, in particular by second and third tier brokers. The big brokers had their own platforms, which doesn't necessarily make sense either, but that's just the world it was. And so I didn't really like MT4, but then I found the cool thing about MT4 is that it was easy and cheap to program. And I'm like, oh my God, you can customize this like a 50s hot rod. And so now, yeah, sure, MT4, MT5. I've talked to the leadership at that company. I don't even like it. And is MT4, MT5 going to be obsolete one day? Yeah, for sure. Yeah. For sure. So should I change? Nah, it's just not that important. I'm like, no, it's good. I got my pivots. I got my setups. I'm good. Okay. Yeah, I'm good. It's all good. But I've seen some really cool things with trading view for sure. I just don't care. All right. Up. Kinda. Okay. Down. Up. So higher, high, higher, low. Remember, there's no prediction in any of these patterns. It did drop like a ton of bricks. Yeah, it dropped below 112. Yeah, I get it. Yeah, but then it went to 113 and a half, came down to 112 and a half and held. So if that continues, it's a rising wave. Yeah, well, maybe we're just waiting for the US to open and then it drops another wave. But even the high time frame now, okay? What did TRADARS say 4 days ago? Okay? It said Bitcoin rallied all the way up to 117. Expect it to make a lower low and retest 101. Oh, you could have covered your Botox 4 days ago. Mm-hmm. Cool. And so what I'm interested in is maybe buying some around there. So how would I handle that? Well, if or when we get down to 103, 102, 101, 100, I want to start looking for patterns that look like this. Aha. And so now you get in little reversals this way. Yeah, you're going to hit this, and then double bottom, then higher high and higher low and higher high. Yeah, well, you still got to do your job. But TRADARS is like you have a quant and a technical analyst working for you. Okay? They don't make decisions. You're the boss, but they do all the grunt work. So I just analyzed Bitcoin on multiple time frames, multiple patterns. And yes, there is down, which was an issued 4 days ago. So it is coming down. And we also know even if it makes a lower low, this price here could get very interesting. So now your job is to figure out, are you gonna sell here and try to make money, or are you gonna hedge? And then, so that should have already happened. I mean, dude, it's been falling for a while. But anyway, so we go back to here. What does this mean now? Are you thinking about buying it around 101? Does this say buy it? No, it says the pattern would look like this. This is why I think you should analyze whether you want to own it or not. Is that a good price for you? I don't know. Open up a chart. This isn't technical analysis, it's pattern recognition. And then I think through, like, yeah, I think it'll get here, retest 110, then we'll probably have to have a double bottom, and then we'll probably have to have a higher high, and then we'll retest that, and then the patterns would be trend. And now I'm in it till Kathy Wood tells me to fail, which is never. Right? I'm going to jam my stop on that Bitcoin and sit on it like Mother Goose. Okay? It's to 1 million and beyond. Or I'm out at break even. And then sell covered calls. Because Bitcoin has got high volatility, I can earn big premiums. So if Bitcoin goes up and then all the way down and knocks me out at break even 1 year later, I make no money on Bitcoin, but I'd make 30%, actually 36% ish. Okay, internal rate of return by taking my Bitcoin and selling call options on it. So I buy it for 100. A year goes by, I sell it for 100. I made no money on Bitcoin, but I made 36% in option premium. Oh, we were talking about gold on that too. We were talking about that earlier, where my Council of Investment Advisors bought gold. Same thing. If you own gold, so you bought it at, let's say 3, 4, 5, 6. Okay. And 1 year later, it comes all the way back and you get knocked out at break even for 4, 5, 6. So you made zero money. But if the whole time I sold call options based on its implied volatility, okay, I'm still going to earn 12%, which is a heck of a lot more than your certificate of deposit paying you 5. You're like, oh, well, I have gold in my vault and it pays me 12. Gold secured puts or calls. I don't need, right? So, anyways, there's a way to engineer money, which is great because I love money. I love money. I love what money can do for you. I like what you can do with your money. You can buy a Lambo and cocaine, or you can support your community. You can support your family. You can contribute. You can give back. You can make a difference. Yesterday, I spent 3 hours at the police department. Uh-oh, what did you do, Wayne? Actually, I'm part of the police academy, and I was learning how to do investigative work. So I was interviewing a victim of a crime. I was working with the team to do the crime scene analysis, so we taped it all off. We collected blood samples and bullet casings and knife, and they all go in different evidence bags and boxes, and then they have to be documented and inventoried properly. So then and you know, all that kind of stuff. And then we found the vehicle, and then I pulled. This was cool. I pulled fingerprints off of the SUV. Yeah, which was great. And we recorded the scene there, and then we searched the vehicle. And then we had to interrogate, right, the suspect and witnesses. It was kind of interesting. It's one way I try to give back to the community. Money is another great one. Yeah. But money is cheap. Time is valuable. So, yeah. It's easier to just give money. So you might as well make more than enough money, and then you just give it away. People will be still appreciative. Like, hey, man, I really like your cause. Unfortunately, I don't have a lot of time in my life, but how about some money? Could I just give you money? Would this help you and your cause that I support? How about some money? Would you like some money? Heck yeah. Yeah. I remember one time I gave like 50 chairs to a charity. 50 chairs. I'm like, come and get them. They're like, really? I'm like, yeah, come and get them. All right, 10-year T note. I want this to go up. Okay, so it is generally speaking going up, but it's been struggling as of late. Okay, that's not good. So that doesn't help me. Up, like I was happy here, and I was happy here, and I was happy here. I'm no so happy now. No so happy. But there's no need to panic either, right? All right. So look at sort of the frequency, if you will, and you look at the trend. Cool. So what is the probability for the near future? Well, 1 or 2. And 2 could be a little lower than up. It just, right? Or it could be longer and up, but either off of dynamic support or off of horizontal support. And if you're a bull, there isn't anything else to do. Okay? Okay? You see? Are you a bull? I don't know, Wayne. I'd like to look at the charts and figure it out. You're not going to be able to figure it out. Sometimes you'll get it right. Sometimes you'll get it wrong. At the end of the year, you broke even at best. Okay? So, for example, what if, okay, we're not talking about 10-year T-note here. Let's just talk about anything. Okay, let's say you're a perma bear on the US dollar. Okay? And you trade pound dollar, euro dollar, Aussie dollar, Kiwi dollar only. Okay. Very specific. So that means you can only buy euro dollar, pound dollar, Aussie dollar, and Kiwi dollar, right? Only buy. And based on your rules of engagement, you never, ever, ever sell. Now, you have stops and stop losses. So you can sell as a bull, but you can never sell as a bear. I want to make that distinction. Because most of the market is moving not because of bulls and bears, but because of bulls or bears. And that's something that amateurs struggle with. It takes a while. So imagine now, based on your rules of engagement, for Aussie, Kiwi, Euro, and pound. That's enough differentiation, okay? So that you're basically building or trading a basket. And they're all against dollar, and you're only a seller of the dollar, which means you can only buy these 3. So, or these 4. So every single day, you analyze your charts and you say, is it a higher low? 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 And if it's a higher low, okay, if it's a higher low, if it's a higher low, if it's a higher low. Now, the steepness might be different, and that's relative strength. So let me kind of redraw all of this. So today, Aussie's strong. So it's going to look like this. Let's say Kiwi's kind of the same. Let's say Euro is like this, and let's say pound is like this. They're all kind of the same. They're all kind of different today. So what's your plan for today? Okay. And so now your strategy, this is all strategic. You said because of your analysis of monetary policy, fiscal policy, and the current situation of fundamentals, you have decided to only sell US dollar. Okay, that's your alpha. Now, every day, you either buy a double bottom, maybe, or preferably a higher low. Okay, you don't like double tops. Okay, but you like higher lows and highs, and then this is going to be the future one. And okay, so for now, Aussie's doing great. Don't worry about it. It sucked yesterday. But imagine your consistency. You only bought higher lows. I mean, by definition, that is consistency. And what about periods in which the dollar is strong? Well, this is why we track seasonality. I have a pretty decent idea when that's likely to happen and less likely to happen. So there are times when this is likely to work. We call that probability. There are times when it'll probably not work as well, or maybe not work at all. But there's also the current fiscal and monetary policy of what's going on. There is also geopolitics. So if there's a bombing or something else, suddenly dollar's going to get strong, and this strategy is not going to perform well for a while. So you either adjust your strategy around the changing variables, or you base it on long-term logic, but at least you know what you're doing. And now you can take vacations because you're like, well, this is not a good time to be selling dollar. I think I'll take 6 weeks off and travel, see the world, and then I'll come back and I'll get ready, willing, and able to start selling again. Yes, you can do stuff like that. Or you can just say, I'm still a bear, but I understand the likelihood of this strategy performing at peak performance is not likely. It could do okay. So we call that shooting at rabbits. You're not hunting moose and elk. Okay? Out here, there are no deer. There are times when you should be setting up rabbit traps, and there are other times when you should be going after big game. Cool. So now you can at least adjust your expectations. You can adjust your lot size. You can say, well, I'm gonna scalp but not compound. Yeah, but now you're making logical decisions. But imagine at the end of the year, I'm assuming you're successful because higher lows generally don't produce lower lows. Most of the time they produce higher highs. Okay. So now imagine you've had a half decent year. When the strategy worked, it worked great. When the market conditions changed, it worked less great, or maybe not at all, but then you adjusted with changing market conditions, which we call seasonality. And now let's say you've done this for 2 or 3 or 4 or 5 years, and you've done okay. You've done great. And now you show it to a potential investor. You're like, man, I want to do this for a living. I want to trade opium. Other people's money. An opium trader. Yeah. And you showed them your track record. And they see over 5 years, 100,000 trades. Every single trade is $1 short. Consistent. So you say, well, hey, why did you do that? Why are you a perma bear on the US dollar? Well, based on monetary and fiscal policy, general market conditions favored US dollar weakness. Oh, okay. Versus somebody with randomness in their trading history. They trade everything and anything. Sometimes they take 30 pips profit. Sometimes they take 3. Sometimes they get 1,000. Sometimes they lose 1,000. You're just a bloody mess. What if your track record was a work of art? A potential Forex investor seen 100 Forex traders just like you, and they all suck. But what if you showed them your track record and they've never seen anything like it before? Look at the consistency on this trader. My gosh. Why did you do this again? Oh, let me tell you fundamentally. Huh. Now you got it. You see? You get it. You got it. You know it's good. Your trades are tight. It's good stuff, huh? Did you click the thumbs up button? Come on. Gold. Bullish on a daily chart, no other time frame. Might be a roll reversal on the bottom of the wedge. So it's bullish with an opportunity. Buy a dip, let it rip. You can see the roll reversal. You can see the dynamic. Get in there, son, but check it out. All the time frames fail to offer any reliable, repeatable pattern. And what about the stock market? Do we have any opportunities? How do you feel about the stock market today? Should you be buying it? Should you be selling it? Huh? Game on? Game over? Risk on? Risk off? This is what TRADARS sees. You see? You're like, wait, I don't see anything. I know. That's precisely correct. Is there a reliable, repeatable pattern on a 15-minute chart for the S&P 500 right now? Well, not an uptrend, not a downtrend, not a sideways trend, and not a reversal. Huh. Yeah. So maybe today is, or at least not now. We have Australia and Germany. We have the Dow. We have the UK. We have NASDAQ. We have Japan. And we have the S&P 500. So I could add more. But isn't that a bit of a warning right then and there? Well, maybe I should put all patterns on. See if anything exists on the S&P 500. Is there any opportunity? No. So should you go in aggressive or conservative? Let me tell you about heartache and the loss of God. Wandering, and hopeless night. Trading the S&P 500 in the middle of Death Valley. Kind of shows me nobody else is doing anything, and they're waiting for you to make the move. And they probably want you to buy it so they can sell it to you. Yeah, crazy, huh?
Fed's Bowman. Worried Fed is behind curve on labor market weakness.
Fed's Bowman. Worried the Fed is behind the curve on the jobs market.
S&P Global PMI forecast to show ongoing U.S. expansion in September.
Dogecoin price forecast. Doge struggles as whales sell amid low network activity. United States Redbook Index, year over year, fell from previous 6.3% to 5.7% in September 19th. Philly Fed Non-Manufacturing Index, 12.3 versus 17.5 prior.
Bay Street likely
Negative.
to post new highs. Euro U.S. dollar price forecast, gearing up for U.S. data and Powell. Fed Chair, Jerome Powell. Speech preview, investors await clues on policy outlook.
U.S. stocks may lack direction ahead of Powell's speech.
See, that's it. See, I forgot. I'm having one of those days. I'm having one of those weeks. Totally forgot about that. There's a lot of Fed speak, right? So Miran yesterday and a few others. And there's a few others today, voting members of the FOMC. But the big one is Powell's speech. And it could be a market mover. There's no other news on the calendar that's worth anything. I mean, we're 31 minutes away from PMI, but it's not a game changer. But in 3 hours and 21 minutes, it could be a game changer. So that's why the S&P 500 is probably stalled. And the thing is, you don't have to spend even 1 second. Well, I guess 1 second. You'd have to pull up our technical radars, pop open the stock market, and find out there's no opportunity. And no opportunity means only risk. Or at least that's one way you can interpret that. Risk is bad. Cool, right? Yeah. And don't forget, Friday is the big one. That's one that matters. PCE. So, hey, my name is Wayne. If you are,
Fed's Bowman. Worried Fed is behind.
Let me turn off the squawk box. All right, there we go. So, if you are a member of Investor Boot Camp and have joined our live watch party series, we are on like number 11 or something. And we have a date, you and I, at noon Eastern time. So what is it? Is it getting close to 9:15? So in roughly 3 hours, 2 hours and 45 minutes, we will do our thing. And it should be fun. Should be informative. It should be educational. And yeah, by then, well, so we'll have to keep one eye on the charts, huh? We'll be doing that and watching the Powell speech. Hey, this is why we do this together as a community. No need to do this alone. It's too damn hard. Peace on earth. May the pips be with you. May your profits be above average. Thank you for your time. Click the thumbs up button.